Cobra III E-mini S&P is one of our top trading systems. Yesterday it made another equity peak. It's having a really good year. This is what the performance looks like over the past 12 months. We went back 12 months to take a look at this, or 1 year. 119 trades, $163 average trade profit. This includes $25 round turn slippage and commission. So it is $188 before slippage and commission and $163 afterwards. So nice average trade profit. Our goal in a day trade strategy, our minimum is $50 before slippage and commission. And it's very hard to get over 100. And in the long term, in the longer period of time, those average trade profits are smaller. But over the past year, this strategy has actually improved. In the last several months, it's had one of its best. The equity curve has improved over the last 12 months. So I want to take a look at expectations. When you trade a strategy like this, you could trade this with a smaller account. You could trade this with a $10,000 account. So getting this type of performance over a 1 year period with a $10,000 account works out really well. You'd have to endure a 51.75 drawdown. Keep in mind you're trading an instrument that's worth the S&P, mini S&P at 3150. At 3,000, this instrument is worth $150,000. So you're trading a $150,000 instrument on a day trade basis. And so doing that with a small minimum size account of $10,000, you will get $5,000 drawdowns. And you shouldn't look at that as a percentage drawdown. You can if you want, but you have to realize that when you put the minimum amount of capital in a trading account to trade a leveraged instrument, that you will get higher volatility levels based on a percentage of your account size. And so the volatility should really be seen as a larger account. You should view this as a larger account, that you're getting the benefit of leverage and you're just depositing the minimum, so you're going to get those big percentage drawdowns on your account when you do that. So let's look at the equity curve, also what to expect over a period of time. For example, this strategy, if you go back a year, July through August the 27th, 6,400 big gains in this time period. So nice run up. And then you go through a very long sideways period. I talk frequently how any individual system can go through a 6-month, 12-month, 24-month period where it goes sideways to flat. And so if you're looking at this August the 26th, it doesn't start breaking out again because it comes back here on March the 20th. That's 7 months later. It's still in about the same place. And so if you're trading this over a 7-month period, you might, if you got in here, 7 months later you're here, you're going to be disappointed if you give this thing only 7 months. But from March the 20th until this time period is when most of the gains happen, and the most recent gains are since June. And so most of the time strategies make most of their profits in a short period of time, and so you have to be in them for a long period of time to catch those cycles. You don't look at this report and say, oh, 19,475 over a 12-month period, this thing, makes $1,500 a month or whatever. So you don't look for a even distribution on a monthly basis. Trading systems don't have an even distribution of gains typically, and so there's volatility in the equity curve. There's long sideways periods, and so you have to stay with strategies. And again, these sideways periods can go longer than just 7 months. They can go 12 months, 24 months. It's one of the reasons why we recommend a portfolio of strategies. We talk daily about a long list of these strategies and what they do each day and how they work. And so here is the E-mini Nasdaq Cobra III. You see it went through this. This is going back 12 months as well. It made equity peaks yesterday. Nice time period from the end of July to the end of August, and then it goes through this drawdown. It gives it all back, and it doesn't start breaking out again until this time period in March. And so the right market environment, low volatility market environments are difficult to trade. And so you go through a period where the market doesn't move much, VIX is low, ranges are low, there's not many intraday trends. And so it's harder to trade right now. It's a nice time time period to trade since the beginning of this year, really. If you look at the beginning of this year, let's look at the annual. 16,435 just since the beginning of this year on 80 trades. That's over $200 average trade profit just this year on Cobra III mini Nasdaq. So 16,660, $5,600 drawdown over the last 12 months, 141 average trade profit, and a $600 stop loss. You see it has slippage and commission, so 625 is the largest losing trade. $600 is a very tight stop on this market. So a lot of your trades are going to be losers. Over two-thirds of your trades roughly are going to be losers. One-third, a little bit more than one-third of your trades are going to be winners in this with these stats. And so you have to approach this from a perspective of cut your losses. We're cutting our losses and we're letting our profits ride. So biggest winning trade is 46.85. Average winning trade is 13.48. Average losing trade is 5.76. Not all trades are stopped out. You get out at the end of the day. So sometimes you get out at the end of the day without being stopped out. So that's why the average trade loss is less than the stop loss. So pretty even distribution between longs and shorts. 94.85 on the long side, 71.75 on the short side. There's 66 trades on the long side, 52 trades on the short side. And so it's basically the same strategy on the E-mini S&P and E-mini Nasdaq. And I wanted to give you a brief summary of how these were at equity peaks, but how this path works when you're trading a system and what to expect.